great to have you here with me again today in this training video to help you on your journey with supply and demand. Now, this video has been created to give you a simple way to see the market direction and to look for those high probability trades. Now, stick with me because you're going to learn some new concepts in this video to allow you to see the market in a different light. Now, firstly, I want to say a great big thank you to everybody who subscribed to the channel over these past 8 months. We've now got to that 4,000 mark, and I'd like to produce this video for you today to help you and a way to say thank you for being part of the community here at NFX Trader. Now, I'm Jonathan, the founder of Norfolk FX Trader, and my idea is to help as many traders out there as I can with this channel. So I hope I'm helping you on your trading journey. So let's quickly have a look at exactly what we're going to be using in this video with the use of these EMAs, and then we'll look at the strategy and how you can apply it. Then by the end of this video, you're going to have a working strategy that I do suggest you go and back test yourself and then forward test on either paper trading or demo account to see how it works for you. But I can assure you it's going to work great once you understand the concept. So the idea is we're going to use these two EMAs. Now these are the 10 EMA and the 20 EMA. And I'm just going to give you a directional bias. As you can see, we can see the market is bullish. It's going to give you that trend direction. And when the market pulls back into these two EMAs, that is our dynamic area where we're looking for a potential bounce to the upside or looking for a pullback for a bounce to downside. Now, if you want to learn more on that concept of using these dynamic areas, at the end of this video, pop down and find the link that goes through to my website. But make sure you watch this video first, then go through to the website, sign up to the free 2 courses on that trend trading course and obviously the basics of supply and demand. If you haven't already done that, I suggest doing that at the end of this video so you can go through and learn more on these concepts. Now, the idea here is we're going to be using this area as the market pulls back in for a buy. We're going to use multiple time frames and use our supply and demand confirmation strategy to find that trade. The same when we see the market pulling back into this area on these EMAs. Once price pulls back in, we'll be dropping down to a time frame, and I'll go through what the time frames will be, looking for that trade to take a sell to downside. It's as simple as that, but once you see the strategy in play, you understand why it's so powerful. Now I'm going to go closer into the chart now. We're going to focus on the last area of price where we see this last swing to downside. I'm going to go through exactly how you could have taken a trade here with the use of my supply and demand methodology I use, but I'm also going to share with you how you will be able to see this and identify this using these EMAs. So first off, we can see the market was in that bullish movement to the upside. We create a double high and we create this area of structure. Market structure is broken on this wick to downside. It's then completely broken by the close on this candle to downside. So this low has then been closed below. So once I've seen this, it's then a potential reversal in the market. And we can see the price does, in fact, pulls back and then breaks even lower. Now that's fantastic because that's showing us a break of market structure to downside here. Now, traditionally, we're looking for then is an area of supply. There is our area of supply, what's been left behind. Price comes back in and we see that reaction with a pin bar, a bullish pin bar followed by a nice bearish pin bar off these two EMAs. So that is showing us straight away a potential reversal. Once we've seen this weekly candlestick here inside this weekly area of supply, using these two EMAs to confirm this is a great area to sell, then you have a way to understand where the market's likely to go. You now know that we're inside a supply zone and inside our dynamic area. Now to fine tune this area here, we're going to now drop down to a 4-hour time frame. So if we're using a weekly time frame, we're going to use a 4-hour time frame for our entry. And if we're using a daily time frame, we will use our 1-hour time frame. That is how we'll look approaching this. But sometimes we will need to go lower on the time frames to confirm an entry. But I'll show you that in this area here now on a 4-hour time frame. So let's just mark off these highs. This is where we're going to be looking for our trade. We know prices come back to our weekly area of supply after breaking structure to downside here. We've pulled back. Now we're confirming a possible reversal as price comes into our two EMAs. This is how you're going to use these two EMAs to your advantage. You'll be able to scan your charts, quickly identify where the market is either bullish or bearish, and you're looking for anywhere where price is pulling back to those EMAs. We'll be looking for that trade. So now we'll go down to a 4-hour time frame. Let's just quickly mark that off. 4-hour time frame, and let me zoom out. So this area of price. Now, how are we going to identify a reversal here? Now, one thing I wanted to indicate, we're not using these EMAs to take a trade. We're using them to identify a good potential area in the market where we're going to see that reversal. Now we're going to look for our trade using a supply and demand strategy. Now, using the entries that I teach in this channel and those market phases, which I will leave those two videos linked above now if you want to watch those videos, and this will teach you about understanding a strategy using the supply and demand methodology. But the first thing I want to show you is that we have this break of a trend line. As the market comes up, we make these highs, we form this double test, we break this trend line, which is going to create an area of supply. It is a hidden zone of supply, and there is a video in the channel which goes through that as well. So do watch that as well if you want to understand more on that strategy. But the idea here is we're looking for a potential reversal. Once we see the market breaking this low right here, now that's this wick. Now for me to see a break of structure, so all I need to see is a wick breaking this low. As long as this is a bearish candle and not a bullish candle, it's a valid break. Then we're going to look at marking out our area of supply. Well, there is our area of supply, but this candlestick is not the best looking candle. So what I'm going to do right now is go down to the next time frame. Let's mark that off to the 1-hour time frame just to confirm that is a good zone. Now we can see and identify this is our area of supply. Now it's a great zone to draw. Remove that large area. We have a nice bullish candle followed by a nice break to the downside in this bearish candle. That is showing me a nice zone to take a trade off. We never come back to the zone on this pullback, and then you can see the market comes in and we drop away quite heavily. That is how you can fine tune your entry once you understand the use of those EMAs to look for that potential reversal. So there is using a 4-hour entry, just confirming on the 1 hour for the entry. We can see we had a nice strong move to downside. Where would you potentially looking for a target? Well, great target. If we go back to the weekly, if you're on a weekly time frame, you'll be targeting the weekly lows, looking for the continuation. Now back to 4-hour, to where we just could have caught this trade. Look how small this stop loss was. We've got just over a 9 pip plus the spread, and you've got all this potential profit. So this is going to be your profit with your stop on this trade. Look at the risk to reward there. That is how you can produce these massive runs in the market. This information I've not shared even in my FOREX masterclass. So if you're watching this video today, you are getting information that I've never shared before, how to use it in the market. Quickly, I wanted to let you know about the FOREX masterclass course, which is going to teach you about those supply and demand and smart money concepts. You head over to the site now. It's members-area.northgfxtrader.com/masterclass. I'll leave a link as well below in the description of this video. Go through this page, you'll learn everything about what's in the course material. And if you head all the way down to the bottom of this page, you'll find there's also a link where you can go through and look at the actual course lessons and what's involved inside this FOREX masterclass. You could say this is my golden nugget, what I've used for years to look for these potential trades. Now that is using a weekly time frame with a 4-hour entry. Now we're going to look at using a daily time frame. Let's go back. I'm going to go to current price. I just want to show you right now what's happened in the market. So if you want to back test further, feel welcome for you to go through and back test this and ask any questions you want on this strategy. But now what we're looking for is we're looking for the market to show us the direction. Well, once we see these EMAs heading down, this shows me on the daily we are bearish. We come back, we've retested it. We can see the market has just broken this structure here and this structure here in the market. and we've left behind this large area of supply. The market's pulled back into this area of supply and those two EMAs. That is what we're looking at now. Now, as well as that, we also have this area of imbalance, which we're seeing here, which has also nearly been filled fully before the drop away. Now, this is where we're going to look for a trade again as price comes back to these EMAs. And we're now going to use this time the 1 hour time frame. So going down to the 1 hour, let me just first mark off where this comes into. So this is where we're looking for the reversal. So we're going to look at this once we probably see this bullish candle closed. So we know price is then coming in. Let's go to the 1 hour and zoom back out. Now again, let's remove this box. We're going to look for the same sequence again. This time I'm going to share with you how you could use a potential entry here, understanding the phases in the market. The push up, we create this area of consolidation. Okay, there's our phase one, we break above. There's our manipulation to the upside and our mark down. That's our phase two. Our retracement phase is here and our continuation is our third phase. Now, when taking an entry here, if you've been through the FOREX Masterclass, you'll understand what I'm saying about a tested zone. And for an entry here, I'd be looking for a particular entry. Now, my entry would have been caught right here in the market. This line, let me just, in fact, draw a line using the MT4 platform. So this is my entry level. So I've taken an entry there. My stop loss is above this height. So again, look at the size of the pips we have here. A 5 pip plus 1, 2, 3. It's about a 7, 8 pip stop on that trade once again. Now back to the daily time frame, a target on this one, we'll use a line here just to show you the target with the previous lows, expecting price to head lower with a continuation of these EMAs back to 1 hour time frame. And you can identify, and I'm going to just show you this time using my Fibonacci tool. And anybody who had asked about the settings, there is a video coming out very soon on the settings, how you can set this up for your use as well. Now, what we're looking at is a 20 to 1 just here. So we could say another 10, so over a 30 to 1 risk to reward on that trade, picking up an entry there, understanding you're going with that direction using the daily EMAs. The same thing with the weekly. Now you can also apply this with a monthly time frame and a daily entry. So that's exactly how you will start applying these two EMAs to look for these potential trade setups. Now, of course, like any strategy out there, there will be losing trades. That's why I suggest for you to go away and back test this yourself and perhaps forward test this, demo trading it to make sure you're comfortable with the way this strategy will work. Now, if you want to take this even further, like I said, down below in the description of this video is those free courses right now to grab on the website, which goes through this type of dynamic support and resistance in more detail and how you can use this to take trades on the same time frame. But I do hope that this is going to help you to find another edge in the markets and to help with your own trading going forward. Now, if it has helped today, don't forget to give me that thumbs up. It's going to let me know that you're enjoying this type of content and to continue to do this sort of content in the future. But for now, check out this video popping up, which is on those market phases, which will help you to identify those phases in the market and to find incredibly great profitable trades once you understand the way those markets move. And I will catch you in the next video.